What's up everybody? Welcome to the Stocks channel. My name is Corey and today we saw a very strong bounce across the stock market as we're starting to get more clarity after FOMC. Will this bounce be strong enough to reverse the bear trend? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were up 3.05% after we get a very strong bounce on high volume buying directly after FOMC. So remember that markets hate uncertainty, and even though FOMC isn't necessarily a bullish event, it is definitely giving more clarity and more certainty on what's to come in the market. And as you can tell, that did trigger a short squeeze as we get a very impulsive rally today. So there's going to be a couple of things you need to pay attention to over the next few days, and that is going to be how this rally develops in the price action. Remember that we have a daily bear trend and we were expecting to see a counter trend rally, and we have officially had the counter trend rally now. So from here, in order to reverse the bear trend, we need to start making higher highs and higher lows, and we need to start breaking out above some critical resistance. So on SPY, one of the bullish breakouts was a close above 428, and we did get that with today's price action. But because today was such a volatile day with likely a lot of short squeezing, we need to see some follow through. So we need to see one more bullish close above 428, and we need to get all the way back above this very strong resistance at 438. And as you can tell from the graphic, that is where the bears are hiding out. So if the bulls can battle the bears at 438 and get that bullish breakout and use 428 as a support level to start building a bull trend, then we can start to say that this might have been the beginning of an impulse that could lead to a bull rally. But I can't stress it enough that this is a downtrend until it's not. And while we were expecting this bounce, we can't just assume we're going to get the bullish breakout. We need to wait for the price action to confirm it, and we need to see this bear trend getting reversed. So while we are getting some bullish price action, we don't have any confirmation until we start breaking out above 438. And that will be the next very strong resistance level to the upside, even though we will also have resistance around the 20 simple moving average and the 50 EMA. So we are going to have a lot of resistance in the 430s. Now, another thing you need to pay attention to is that the price action did get a bullish breakout because we did close back over our 13 EMA. And previously that level was acting as resistance during the downtrend. So you can't ignore these little hints if you're looking for bullish reversals, or you just need to sit on the sidelines and wait for more clarity. So we still do have valid price targets down here at 400 and 393. But we can't completely ignore the fact that we're getting a bullish breakout. So there is going to be the possibility that from here we get a pullback into a higher low and make an attempt to break out above that level at 438. So higher lows are going to be right around 422 down to around 416. And if we start breaking back below 416, it's more than likely this was just another lower high as we continue to trend downwards in this strong bear trend down towards those lower price targets. So there's going to be a lot of price action you need to follow over the next few days. And the good news is that from here, there are great risk reward setups because you're either going to try to short at resistance and know your price targets to the downside, or you're looking for a pullback to a higher low and you're trying to trade off support. Remember, in a volatile market, you can make money in either direction. Just make sure you're defining your risk and you know exactly what your trade plan is. Don't get whipsawed between resistance and support, so there's not going to be too much you can do between 428 and 416. Wait for some sort of price action confirmation, which means you will need to hammer down into the smaller time frames. So right now it is looking good for the bulls in the short term, but there's still a lot of work for the bulls to do to battle the bears at 438 and get confirmation of that bullish breakout. On the NASDAQ 100 triple Qs, we were up 3.38% today, and just like SPY, we did get a price action breakout back over the 13 EMA, but again, we need to see some follow through. We're going to have a lot of resistance around 330, and if we do get the bullish breakout above 330, we still have very strong resistance just above at 334. Above 334, that will be a bullish breakout, but the bears in the triple Qs are hiding all the way above 347, so we really won't have confirmation of any bullish breakouts until we can start closing above 347, and we will have resistance on the way there at the 50 EMA right around 342. So while this is a very bullish candle, you can tell we still have a bear trend and we're still making lower highs. So we need to get that bullish breakout above 334 to get some type of confirmation that the bulls are taking over. If we do get a bullish breakout above 334, we'll be looking for a higher low to confirm that we're starting to develop a bull trend. Otherwise, you're looking for the bearish breakdown back below 318 a retest of the lows right around 310, and possibly hit that price target down there at 303.5. So remember, this is a downtrend until it's not, so you're waiting for a bullish breakout and a higher low before we see any confirmation that we could be breaking the bear trend and potentially starting to form a bull trend. Don't ignore the little hints like breaking back over the 13 EMA and high volume buying, but just keep in mind that today was a lot of shorts getting squeezed out of their positions, so we really need to see some type of follow through in tomorrow's price action. In the Dow Jones, we were up 2.82% today, and the Dow Jones bounced all the way back up to critical resistance at 340, and this is where a lot of bears should be showing up in the Dow Jones. Most of the bears are going to be waiting right around 346 to 347, but without a doubt, this is a very strong resistance zone right around 340 to 342, so we could get rejected from here and then try to put in that higher low for the bulls. The higher low for the bulls will be right around 333, so watch that as the most critical support level from here. Remember, in the Dow Jones, we met our downside price target from the double top, and we're starting to get a very impulsive bounce ever since, and it is on increasing volume, so this is going to be a bullish development in the short term, but we do still have a bear trend on the daily chart, so we still need to respect the fact that we're in a downtrend. If you were to turn this chart upside down, this is exactly what the bull market looked like last year, where we continue to bounce off the 20 simple moving average in the very strong bull trend. So if you're having trouble picturing this because you're bull biased, just flip your chart upside down and you'll understand that this is exactly the buying position that the bears are going to be using. They're at strong resistance, they have the benefit of the trend, and they are going to take this as an opportunity to try to short this market. Now, with that being said, if the bulls are strong enough, they can break through that resistance and cause short squeezes, which is only going to make the rally even more impulsive. So look for the Dow Jones above 340 and above 342 to start causing short squeezes, which should help the Dow Jones easily go up there to close that gap at 347. On the Russell 2000 IWM ETF, we were up 2.67% today, and IWM did close back over the 5 EMA and the 13 EMA and did get back over that resistance at 191.5. However, we are still in a bear trend and we're still below a negatively sloping 20 simple moving average and 50 EMA, and we don't have a bullish breakout until we get back over 200 and 205. So I'm trying to help you understand from an objective viewpoint, these are still lower highs and downtrends, so we can't just say that today was bullish enough to completely scare away the bears. If anything, the bears are just licking their chops, dying for the opportunity to short at resistance, so we are not out of the woods yet just because we had one strong bounce today. So watch all of these strong resistance zones on all the indices, and if we do start to get the bullish breakout in the price action, then we can instantly become more bullish. The definition of following price action is not having any biases and only taking what the price action is telling you. And right now the price action is doing essentially what we expected to see, which was a strong bounce and counter trend rally after we liquidated those shorts below support. So continue to follow these trends because right now these trends are still bearish across the board. To the downside, you're looking for support at 191 and the previous low at 185. On the ARKK ETF, we were up 5.13% today on very high volume, so this is more evidence that a lot of shorts are getting squeezed out of these positions. Because ARKK has been in a bear market for so long, there are so many people shorting this ETF that eventually they will get short squeezed. So another short squeeze in the ARK ETF will be on a breakout above this level at 52, but we will still have resistance at 55 and our resistance trendline right around 60. And if we do break out above 60, you're looking for the gap fill at 66. However, if we start getting rejected from 52 or right around 55, you're still looking for a retest of the lows right around 47. And if we break below that level, you're looking for the price target at $40. This is a very strong bear market, so you cannot get bullish until we at least break out above 60. And I suggest waiting until you see price action confirmation breaking out above 70. On the VIX, we were down over 13% today, so we continue to see the VIX getting crushed, and we're back below all the moving averages in the price action, and we should be very close to testing that support right around 24. The VIX crushing below 24 will be bullish, but we need confirmation in the price action because right now the VIX is still above that level, and we could still see another spike in the VIX as soon as tomorrow. So we do have a bull trend in the VIX even though the price action is trying to break down, but view this as the VIX is coming into support, possibly making another higher low before another impulse to the upside. Otherwise, we're getting a bullish development if the VIX starts crushing below 24. On Bitcoin, we're currently up about 5.6%, with Bitcoin very close to trying to test resistance at that 50 EMA right around 41,000. Remember, Bitcoin was in a falling wedge and we were going to see a very big move coming off of this support, and so far it looks like the bulls are showing up at support and we're starting to get a bullish breakout. So without a doubt, this is a bullish development on higher volume, but the next bullish breakout won't be until we get above 41,000 and then start closing above 42,000. Above 42,000, this will be looking a lot more bullish, and the next bullish breakout above 42,000 will be the close above 45,000. If you're buying at this level, you still have to set your risk down here around 37,000. So like I said the other night, this is the best time to be taking on risks because you're so close to your defined risk level. If we do break below 37,000, that will be extremely bearish, but right now it looks like we are getting the bullish bounce. On NVIDIA, we were up 3.73% today as NVIDIA did break back above 191 and got back above the 13 EMA, so it does look like we're going to retest that breakdown right around 210, which is also the 20 simple moving average. Remember that NVIDIA broke down through that level, which told us we were likely heading to much lower prices, but we never back tested that level as resistance. So there is the real possibility that NVIDIA already saw the bottom down here right around 184, but if we get rejected from resistance right around 210, that will be extremely bearish, which means we could still be trending lower to the price target at 150. Now, I don't think we need to hit 150, and there's a real possibility we already saw the bottom, but we need to see that price action confirming it by breaking back above 210 and then closing above resistance at 223 and closing the gap at 230. Above 230 will be looking a lot more bullish, but not any sooner than that, so you need to respect the downtrend and the possibility we could still get rejected from resistance. On Tesla stock, we were up 4.77% today, and Tesla had all of the follow through we needed to see with yesterday's price action. Remember, we were getting back over 900, which was a bullish development, and today we launched off of that level and closed all the way back above 937 and are retesting resistance right around the 50 EMA at 957. The next bullish breakout from here is getting back over 957 and closing above 975, and then we could still see Tesla getting back into a bull trend. So from here, the Tesla bulls need to hold this level at $900 as support, but if we lose that level as support, we are more than likely seeing a lower high as we continue to trend lower. So by far the most critical support level remains $900. Below $900, you're looking for a retest of support at $856 and $828. On Apple stock, we were up 4.1% today, and Apple is looking extremely bullish, bouncing off of this support at 156. And right now, this is looking like we could have seen some type of double bottom off of the support, and it does look like we're getting a bullish breakout back above 166, but we need to see follow through. If Apple can get one more bullish day above 166, that will be a bullish breakout from our resistance trend line, and then confirmation will be a close above 168 to go up there and close the gap at 174. So in a market moving stock like Apple, if we can get that bullish breakout, that will be a bullish signal for the market as a whole. So watch for Apple to be getting a lot more bullish above 166. From here, if we do get a pullback, you're looking for a retest of support at 162, and below that, we're coming all the way back down to 156. On the financial sector, we were up just over 3% today, and we did close back above our very critical support zone right around 35. So there is the possibility this was just a stop loss raid below support and we're trying to get back into a bull trend, but we won't have confirmation until we get back over this 50 EMA. The industrial sector was up 2.9% today, closing back above two of our moving averages, and we are looking like we're getting a strong bullish bounce, but we need confirmation by closing back over the 50. The healthcare sector was up 2.22% today, bouncing off of this support level, but still below the 50 EMA, so we still are developing bearish momentum even after this strong bounce. The energy sector was up 4.15% today, back over that critical support zone and making new 52-week highs, so the energy sector is still looking very bullish at this time. So jumping back over to the S&P 500, even though this was a very bullish day on very high volume buying, there's still the possibility it's a lower high in the larger scheme of a downtrend. So you still need to respect the fact that today was a lot of short squeezes and we need to see follow through in tomorrow's price action. If we start pulling back from any of this resistance and you're looking for the possibility of a bull trend, you need to find a higher low to start showing that we're seeing some type of a reversal in the trend. It's a downtrend until it's not, and there's going to be a lot of bears up at this level at 438. So watch that as the next most critical resistance level. Make sure you're using proper risk management because this is still a very volatile market. And as you can tell, volatility does work in both directions, and that's why you saw such an impulsive bounce today. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF QQQ and sends you all of your buy and sell alerts directly via email and text message. If you want to learn more information or subscribe to Bank Trade Alerts, you can click on the link in the description of this video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.